Good afternoon. I'd like to welcome you to this afternoon session of Examination Helpline on Business Studies. We have with us in our studio, we have with us two of our experts. We have Dr. M.M. Goel from PGDAV College, and he's from Delhi University, and he's also the author of our business studies textbooks. He's an expert on finance, financial management, business finance and financial markets. Then we have with us Mrs. Shashikala. She's from Mount Carmel School, and she's also been teaching business studies and accountancy as well as entrepreneurship for a number of years, and she has also been associated with our NCERT programs. So I think we can start our program, and we have a telephone number for you, which is written on our screen at the back. And we can start, and if there are any questions which you have to ask in business studies part 2, business finance and marketing, please be free to ask whatever you feel like asking. And so I think you can get ready with your books and pens and ask questions. In the meantime, I think I'd like to first tell Shashikala to actually elaborate on the kind of marking scheme or the kind of questions that are asked, and what is the weightage of the questions, as well as what exactly the type of questions that are going to be asked.
Yeah, in book 2 we have 4 chapters. You can now see this on your screen. The weightage of marks will also be displayed for you. You can see on your screens now. Chapter 9 is financial management. The weightage of marks is 12. The next chapter, chapter 10, is financial markets, which is for 8 marks. Chapter marketing, chapter number 11, is for 14 marks, and chapter consumer protection is for 6 marks. So the total of part B, book 2, is 40 marks. Book 1 was 60 marks, and now total becomes 100 for your business studies paper.
What exactly is the breakup in this?
Yeah, we'll just go through that, and I'll show you how chapter wise the breakup will be different. We can just go through that. We can first begin with business finance, which is chapter number 9. Now in this chapter, students can see on the screen now. I'll be showing you. This is analysis is basically based on the recent board exam, that is 10, and in business finance we have the following questions. The weightage varies. I'll just show you how according to. Just a minute, I'll begin with the first, where you can see how the different types of questions that can come. It can be, this is how it begins. You can see how these are the various topics which are covered, that is meaning, role, objectives of financial management. Then there are financial decisions, financial planning, capital structure, fixed and working capital requirements, and so on. Dividend decision is also there in this chapter. So out of 12 marks, generally you will have a 6-mark question. Then you may have 1 3-mark or 2 3-mark questions, or 1 5-mark, and a 1-mark question also might come. Then you can have short answer questions for 1 mark, like name the type of investment decision which relates to short term and affects day-to-day operations of the company. Say for example such questions. Now these are questions which require students to have elementary knowledge of the terms that are there in the chapter. Then we can also have other types of questions for 3 marks, where you can have questions like which process prepares a blueprint of the organization's future, and so on. These are all 3-mark questions. Or this next one, which is a little tricky for students: how are the shareholders of a company likely to gain with a debt component in the capital employed? Now this can be, you can be asked to explain this with the help of an example. This is basically trading on equity.
Okay, yeah. Another thing, of course, is these are the kind of questions which these are the typology of the question which can come. Yes. Can you just go on to the next chapter also, so that we can just have a quick overview of what?
Sure. We can now go to the next chapter, that is we can go on to financial markets and take a look now again. And in this, you can see that
marks
allotted are 8 marks, and the various topics that we cover are money market instruments. Then we go on to capital market, and its 2 types, that is primary and secondary market, and so on.
And the kind of questions which can come
are basically in this chapter. Possibility of a 6-mark question is not there, while you can have a 5-mark and a 3-mark question, or 2 4-mark questions also can be there.
This is basically the kind of question. The way the marks can be divided in the chapter itself.
Yeah, that's right.
Okay. But it need not necessarily be this.
No. This is basically based on the 2010 paper, the
it's
analysis.
also based on the blueprint on the kind of questions which anyone can ask in this.
Yeah, it is just an example.
These are just examples. I mean, these are not really the questions which might come.
Yeah, that's true. And you can have functions of stock exchange and so on, and you should know what is Sensex. You should know all the latest terms related to the chapter, like dematting facilities and dematerialize, so on. So
And
that is this
marketing?
is. Now we go on to marketing. Marketing is a chapter which has a
14 marks.
14 marks weightage, which is very high, and so therefore students have to really study this chapter thoroughly. Only then they will be able to answer the questions properly. And it's a chapter which has see the various topics. It has marketing, its meaning, and so on. And we can just see in the.
What are the kind of questions? I mean, what are the marks? If you can just tell us the marks.
Yeah, sure.
3 marks, I think. How many questions of 3 marks?
We will be having. Say we will have a 6-mark question in this chapter, since there are 14 marks allotted to this chapter. So there has to be a 6-mark question. Then there can be a 5-mark, 3-mark, and so on.
Right.
So the questions can be based on the 4 P's which are there explained in the chapter, and it can also be otherwise individually asked on marketing philosophies and brand names, elements, and so on.
Right.
So and then we have the next chapter, that is consumer protection.
We have.
Consumer protection is a fairly easy chapter with just 6 marks weightage, and here again there can be one 6-mark question. Then that means if there is a single 6-mark question which has come, then it obviously means there will be a long answer, and there will be no other question in the paper from this chapter. And it's a fairly easy chapter which talks about consumer protection rights, responsibilities, then the various acts which are there as well, role of NGOs and so on. And this is the chapter on this.
Right. Okay, I think since we're not having any questions right now, I think we'll just go on to Dr. Goel. Dr. Goel, if I mean since we don't have any questions, but could you just like for example the objectives of financial management, objectives of business finance. In that we have like normally it's considered, I mean, wealth maximization is our objective, and which is slightly different from the profit maximization objective. So I mean, why is it that we have taken wealth maximization to be an objective in business in financial management?
See, it is like this. Normally we understand that profit is something that is to be maximized, but that is a very short run concept. When we deal with finance, we include expansion, etc., everything in the term, and therefore profit maximization cannot be the motive for various reasons. First reason is that profit as a term is a little ambiguous, in the sense that when we say profit maximization, do we mean maximization of gross profit or net profit, or operating profit, profit before tax or profit after tax? That is one limitation of the term profit. Secondly, the profit is subject to so many accounting policies and practices followed by the management.
I think I'll have to interrupt you. There's a call from Chennai. We'll first listen to the call. Hanji, yes, please.
Hello.
Hello, yes.
Hello, sir. I have a doubt in Consumer Protection Act.
Right. Could you give your name also, please?
My name is Yasi.
Right.
Okay. The provisions relating to Consumer Protection Act 1982.
Right.
Let's list out the provisions.
Provisions relating to Consumer Protection Act.
Yeah, the provisions relating to Consumer Protection Act 1982.
1982, is it 1982 or 86?
86.
It
Please
is
go ahead.
86.
Yeah.
Okay, sorry.
1986. Right, okay. He wants to know the provisions relating to Consumer Protection Act 1986.
See, basically you don't have to go into too much details about it. In this chapter we are only discussing about the definition of who a consumer is, basically.
And basically all these, I mean, all whatever we've done, rights, remedies, reliefs, all of them are in the Consumer Protection Act itself. So those itself are the provisions relating to the Consumer Protection Act. So we'll just elaborate a little about what exactly are the various provisions that we are talking about in the Consumer Protection Act?
Yeah, like
Shashikala?
rightly ma'am said, the rights and responsibilities have already been listed, and apart from it you should only know the definition of who a consumer is. Now in this, the definition has been divided into two parts. It talks about who is a consumer of goods and as a consumer of services, and apart from it you should just briefly know who are the various people who can file a complaint, which is also given quite clearly for you, who can be a consumer, who can file a case, and so on. And of course next, under the act you have to study about the three-tier redressal system. Now three-tier redressal system is a little not too difficult, but I think if you are able to understand how the redressal works, it will be very easy. So maybe I can
and also at the same time, basically the question that he was asking was provisions relating to Consumer Protection Act, but as such, I mean, we will restrict ourselves to the consumer rights, consumer responsibilities. These are the main things which we have to cover over here. And as such, when we talk about consumer rights also, we have 6 rights with us, that is right to safety, right to be informed, right to choose, right to be heard, right to seek redressal, and right to consumer protection, consumer education. These are the 6 rights, and of course the consumer responsibilities, and also and then at the same time the 3-tier system, redressal system, which is also given under the Consumer Protection Act also. Shashikala, would you like to
you
tell us
can now
about
see on your screens the slide about this. It talks about how there's a 3-tier redressal system, and there's a district forum, state commission, and a national commission. Now in this, the basic thing you need to understand is the value of the compensation claimed, because you get an application question sometimes in this part. Even in this year's board exam, there was a question about how there was this person who purchased a car for 19 lakhs and he was not happy with the services the car provided. So where he should file the case and so on was asked. So according to this, the first thing was, since it is 19 lakhs, the amount is less than 20 lakhs, so obviously he has to first file the case in the district forum. And if the person is not satisfied with the decisions of the district forum, then he can appeal to the next higher level, that is the state commission. And finally, the highest level he can appeal is only at the national commission level. This needs to be understood. Of course, otherwise if the value of the compensation claimed is beyond 20 lakhs and up to but less than 1 crore, then he has to file the case in the state commission. And any amount exceeding 1 crore has to be in the national commission.
Right. Well, I think let's go back to Dr. Goel. Since you were talking about wealth maximization, we were talking about wealth maximization as an objective of financial management.
Yes, I was telling about why the profit maximization is not an operationally feasible objective. One thing that I have already said is that it is a vague term. Second thing that I was talking about is about the final figure of profit depends upon what kind of accounting policies are followed by the managements of the organizations. For example, a company might follow straight line method of charging depreciation. Another company might do it on the basis of written down value method, and there are certain other methods as well. The method chosen decides the amount of depreciation that is to be charged to the profit and loss account, and hence the profit figure is affected.
Right.
Similarly, the methods of inventory valuation, the policies regarding amortization of deferred revenue expenses. There are so many ways, the distinction between capital item and revenue item, all these combine to make the final figure of profit that is arrived by the P&L account very vague. The profit figure of one firm is not comparable with the profit figure of other firm if we go and look at the policies and practices followed by each of the managements of these different companies, and therefore we cannot think of maximizing something the meaning of which is subject to different policies, etc. And therefore here we resort to wealth maximization, because wealth is ultimately affected by what kind of benefits and costs are there with some decisions that are taken by the management, and therefore wealth maximization is a superior goal compared to profit maximization.
And basically it means maximizing the market value of the equity share.
Yeah, it means the maximization of market value of all the equity shares outstanding.
That means basically the owner's wealth should be maximized.
Yes.
That means owner's wealth in any case is can be denoted by equity shares, let's say.
Yes.
So basically whatever decisions that we take, all those decisions should lead to some kind of maximization, that is maximization of your equity share, that is your shareholders' wealth.
I would
That's
also
what we
like to
talk
give one more example. Suppose a company invests money in a very risky venture. Maybe that the risky venture turns out to be profitable, and therefore the profit is increased, but because of the higher risk, the shareholders want a higher compensation because they are bearing that higher risk, and it might turn out that the risk is so much that the higher profit doesn't compensate it and the market value of shares fall, and it would not lead to higher wealth, maximization.
Any kind of value addition to the market
To the,
market
yes.
price of the shares. So therefore, so I mean, like when we talk about it, so therefore we have these three decisions, financial decisions, which also basically, why do we take these three financial decisions? That is the investment decision, the financing decision, and the dividend decision. These three decisions we normally take because, I mean, whatever it is, they should all lead to one thing, that is wealth maximization. That is, at the same time there has to be some kind of an effect on your equity shares. I mean, that means again, when we talk about equity shares, we mean the financial market. That is, if you're talking about maximizing the wealth, maximizing the market value of those shares. Right. So could you just explain a little bit about about the investment decision and other decisions?
Yes.
Also?
The three kinds of decisions that are there are investment decision, financing decision, and dividend decision. They are all interrelated. For example, first one is investment decision. Investment decision is of two types. One is the short term investment decision, another is long term investment decision. Long term investment decision is also called capital budgeting decision. In here we try to see the cost benefit analysis of investing in a new project which is of a sufficient length, definitely beyond a year, and only when the cost benefit analysis is favorable, only then funds are committed to that particular project. Similarly, short term investment decision has so many other factors like components. For example, you have here cash management, you have here receivables management, you have here inventory management. They all combine and they are all called working capital management. That is investment decision.
Right. Sashikala, would you like to just tell us what are the kind of questions which can come under this topic, investment decision?
Okay, according to the board, we can see some questions probably we can discuss here. We can see how this year,
that's what
this
I
was one.
remembered.
Name the type of investment decision which relates to short term and affects day-to-day operations of a company. This could be a 1 mark question, which could be working capital decisions.
Capital management.
So
then how many words do you think should be given for this kind of a question?
Answer? It can even be a few words or a sentence, as long, because it's a 1 mark question, the answer should be precise. Otherwise the student will not get marks. So
cash management, receivables
I mean,
management.
basically working
there can be so
capital,
many.
working capital, I mean, there are three decisions which are there: cash, receivables, and inventory. These are the three decisions which we take in working capital management. Any other kind of question?
We can have some other questions like which process prepares a blueprint of an organization's future preparations relating to finance. Give any two reasons why this process is needed. This is basically about financial planning, and it's a direct question from the textbook. It's not an application question. Then you can have the other one which we were talking about.
What exactly is the child expected to write in this?
In this is all about financial planning and why financial planning is required, importance, etc. Reasons for financial planning, etc. can be explained. Then of course the traditional question is on trading on equity, which often comes, and students can be asked to explain with the help of an example also.
That of course.
So this requires a little.
Okay. Then let's say suppose we go on to the choice. Let's say suppose we go on in financial management only. In factors affecting choice of capital structure, we have two factors: our interest coverage ratio and debt service coverage ratio. These are the two ratios which students do find a little bit of difficulty in these ratios. So Dr. Rohil, could you just explain what exactly are these two ratios and also the difference between these two ratios?
Interest coverage ratio, you see, is EBIT divided by the interest. It shows that EBIT is so many times the interest. So if this ratio is high,
EBIT is earning before
EBIT is earnings before interest and taxes. That is the figure of operating profits. Now, if this figure is many times the interest liability, naturally the company has a higher potential to issue debt, because even with a higher amount of debt it would be financially safe, because the EBIT would not fall short of interest. So, EBIT upon interest takes care of this interest coverage ratio.
Then you
On the other hand, the debt service coverage ratio takes into consideration that it is not the interest alone that is to be paid. Finally, we have to repay the liability also, the loan, and therefore
Right.
here in the debt service coverage ratio we also consider in the denominator the return of capital, the return of the loans, that is you might be needing money for redemption of loans, redemption of debentures, and therefore when we consider that amount it becomes debt service coverage
Right.
ratio.
Therefore-
Debt service coverage ratio is probably a better indicator of the firm's capability to issue more debt.
Okay, so therefore, like it is calculated like this: profit after tax plus depreciation plus interest plus non-cash expenses divided by preference dividend plus interest plus repayment obligation.
Repayment obligations.
Right. So this is the formula that we have, and then besides these two factors, we have other factors also. Like for example, the cash flow position is there, and return on investment, cost of debt, tax rate, cost of equity, flotation costs, risk consideration, flexibility, control. These are all the other factors which are there. Could you just could we just have a quick explanation of cash flow position also? I think that also children normally do get confused about between cash flow.
You see,
I think there's a question. Yes. Is there a question?
Yes, ma'am. Good afternoon. I wanted to ask a question from the chapter Consumer Protection.
Right. What is your name?
My name is Arushi.
Okay, Arushi. Right. Which school are you from?
I'm from St. Thomas's.
All right. Right.
Ma'am, on page 317.
Right.
Yeah, sure.
Right. Please
is
go ahead.
Yeah, 370.
Hello.
Hello.
Yeah. Go ahead. What is your question?
Ma'am, my question is that on page 370,
Yeah.
we have some pictures there
Right.
which represent various symbols that are used for
Standardization.
Yeah,
Standardization. Right.
standardization. Ma'am, sometimes we get a question out of these symbols to recognize the symbol. Yes, ma'am. Ma'am,
Okay.
I don't know the symbol. There's a symbol. One is Hallmark, one is XBO, one is ISI, one is
ISI.
Agmark.
Right,
What is the fifth symbol?
We'll just check it up and let you know. Okay. Do you have any idea what exactly? We'll just check it up and see. We'll just get back to you after 5 minutes. Then maybe. 1 second. I think it is. Anyway, we'll just check it up.
Yeah.
Okay. Is there anything else, Dr. Goel? Can you just?
yeah, you were asking me about the cash flow.
Yeah, cash flow position. You were
The
talking
situation is that sometimes a firm may be profitable and yet it may be short of cash, and vice versa, because sometimes there may not be a profit, yet you find that the liquidity position is good, and therefore profit alone is not sufficient, because after all when we have to pay to our debenture holders or other providers of finance, we need cash, and therefore cash flow position of a firm is also equally important, if not more, because after all the cash is to be used to pay them, and therefore mere profitability is not enough. With it, cash flow position is also important to decide whether we can issue further debt or not.
Okay, right. Right, sir. So then can we go on to a little bit about financial markets? I think financial markets is also again another very important chapter. How many marks is this? Shashikala?
It's for 8 marks.
This is for 8 marks. And so in our financial markets, if you see, so, can we just, what exactly, I mean, how exactly does the financial market work? The concept of financial markets, if you can just
See,
little bit about that.
financial markets are basically those mechanisms through which those who provide finance
Funds are transferred.
and those who need finance,
Right.
it connects them.
Right.
Now, if you need finance for less than a year,
One second, there is another question. Asim from Chennai. Right, Asim?
Hello?
Yes, Asim.
Sir, hello?
हाँ जी कहिए, what is your question?
मैडम जी एक सिंपल से डाउट है इसमें वेल्थ मैक्सिमेशन और प्रॉफिट मैक्सिमेशन बोले थे ना सर
हाँ, right.
उसके डिफरेंसेस भी बोल सकते हैं क्या वो
हाँ, right, बोल सकते हैं, पर वैसे देखा है प्रॉफिट मैक्सिमाइज,
my question is list out the difference between the wealth maximization and profit maximization with some examples.
okay. Actually देखा जाता है प्रॉफिट मैक्सिमाइजेशन as an objective financial management,
The difference between profit maximization and wealth maximization
right.
and quote some layman examples.
Okay, layman, actually it's
Madam.
thank you. Actually देखा है profit maximization as such we said that it is not used, and as such it is not considered to be a very good objective of financial management as such. That is why we have gone over to the wealth maximization concept. So as such, I mean listing out differences is generally slightly difficult, because you cannot possibly say that this is, we can just explain what exactly profit maximization is and what exactly wealth maximization is, and then of course the differences can be seen. Dr. Goyal, would you like to
Yeah, I
a
would
little
like
bit
to.
about wealth maximization?
I
also?
would
You
like
see?
to. I would like to. You see, profit maximization means that you try to increase your profits.
Right,
Wealth
so the-
maximization means increasing the value of all the equity shares that are outstanding.
Okay, so
So one thing is that the two are calculated differently. second thing
can
is-
I just revise 1 minute? I mean, what he means is that one thing is one difference is profit. That is in profit maximization you are talking about only increasing
The
profits.
profit figure.
Right, and when you talk about wealth maximization, you are talking about
Increasing-
all decisions which increase your market value of the
Shares.
equity
Equity
share.
shares.
Equity share. So and so because of equity share prices being increased, that increases your wealth, total wealth.
Yes. One other difference that I can tell you is this, that when you are maximizing profits without regarding the risk factor, that is, if you are investing in risky projects, maybe that you are able to increase your profits, but the higher risk might mean that the value of your shares falls, and therefore higher profit may not lead to higher wealth,
Right.
wealth, and therefore the two are different from each other.
So therefore, basically the difference, and basically in profit maximization, they are not considering risk.
Yes.
That is one thing.
Yes.
That they are not considering the risk factor at all, right? And in wealth maximization,
In wealth maximization, the risk is automatically taken care of. Let me explain it like this. Suppose I get money from my shareholders, equity shareholders. I put them in some risky venture. Now, the cost of equity share capital, that is the return that equity shareholders desire from my company, depends upon what kind of risk profile my company has. If I put that money in a risky venture, earn higher profits, but because of the higher risk, and you know that higher the risk, higher should be the reward, the equity capital costs
Will
higher,
increase.
and therefore it might turn out that higher profits are there, but because of higher risk the value of the share falls actually, and leading to a less than optimum wealth. That is, wealth actually might in fact suffer, although
Right.
the profits are higher, and therefore the two are not identical, the two are not commensurate, and if one goes up, it does not mean that automatically the other would also go up.
Okay.
And therefore we find that if both of them are not commensurate with each other, then which one is a better indicator of good decision making, and that we say is the wealth,
Wealth
maximization, and
that's
not profit maximization.
that's exactly what we meant. I mean, that means in our when we talked about the second point, that is while you are thinking of maximizing profit over here, you are not considering the risk factor, whereas in the wealth maximization thing you are considering the risk factor, and so therefore you may not invest in it. You may not invest in something which actually will not increase your equity share capital. So that is exactly how, I mean, these are the basic two difference. Any other difference which you would like to mention over here?
Yes, another difference is I can take money from my shareholders. Consider this example. Suppose I take equity capital from my investors, put it in a bank account, earn let us say 8% on that, and my overall profit figure will go up. And I say, well, you want higher profits, look, I am giving you higher profits. But it may not be a correct decision. Why? Because if I am taking money from them and investing it at 8% in a bank, my equity shareholders can themselves invest it in a bank and earn more than 8%. When they are investing in the equity shares, they want a higher return because they are taking higher risk. And therefore, if I do adopt a practice like this, I am actually increasing the profits but reducing the wealth, and therefore it is not an optimum decision.
Right. So therefore, when you talk about wealth maximization, okay, there's just one more question. Ankush from Kolkata. Yes, Ankush.
Yes. Happy New Year, madam.
Happy New Year. Thank you. Same to you.
Yes, sir. Actually, I want to know that about the investment and the wealth process.
Right.
How a beginner should go
Right.
that investment
Right.
process.
Okay. Can you just explain? Just can you repeat the question again? How a business should go?
How a beginner understand
Beginner.
Right. How a beginner.
understand to save the
Okay.
money by investing by investing.
Okay. I think yours is a very general question. That is exactly how exactly should you save your money, and where exactly would you like to should we invest so that you maximize your wealth? Is that your I think that is your question. Dr. Goyal, would you like to answer
Yeah,
that
I would.
question? I'm sure he
You
can.
see,
Ankush from Kolkata.
Ankush.
Right.
Ankush, you see, first of all, in order to invest, first of all, start saving. Once you save your money, then you see there are so many different kinds of avenues in which you can put your money. But you should put your money initially on the basis of your knowledge about the financial markets. Let me tell you, let me caution you that if you are not aware of the equity markets, the share market, all the financial markets, different kinds of instruments available,
Right.
you should not go into a risky one.
That I think we can just explain. I mean, one is of course financial market, that is equity shares and bonds and all that. The other, of course, the safer investment would be, I think,
Yes.
banks.
You see, for example, you can go to a bank and deposit your money there, maybe in a fixed deposit, earn around 8.5%. On that you pay tax, so you finally are left with much less. But that is the price you pay for keeping your money safe. The moment you move from the bank FD and suppose you go to a company FD, they pay you higher interest, but there is a bit of risk.
Also,
From company FD, yes, and from company fixed deposits, which are called fixed deposits, if you move to the debentures of company, you earn a little higher, but the risk is a little higher as well. And from debentures, if you go to preference share and equity share is the riskiest of them all, and therefore on an average the return that you are likely to get, I am not saying you will get, I am saying the return that you are likely to get is higher than what you get in bank FD or even in deposit
Right,
with
sir.
a company. But remember that although you are likely to get a higher return, your expected profit is higher, but the risk is also higher, and that means you might actually turn out to be a loser. And therefore, always invest in the market in an instrument which you understand properly, that okay, this is the return, but this is the associated risk, and choose that combination which suits you the best.
Right, sir. So there's in between these two instruments, maybe we can talk about mutual funds also. I mean, there is some mutual funds also we can invest in, and mutual funds are started by a number of banks. In fact, a number of public sector as well as private sector banks have started these mutual fund schemes. Now, so what
I can suggest to you another avenue that's very rightly suggested by madam, and that is that if you are not aware of the intricacies,
Of the
subtleties of the financial markets, then one indirect way of investing is that you select a mutual fund and put your money in that. But here again I would suggest to you that you should not put all your eggs in the same basket. It's better to spread them at least over 5-6 different funds based upon the past performance. Of course, past performance is not a guarantee that the future performance will be just like that, but then the probability is a little better. And here then different persons who are experts in their field, they manage your money, they charge a little bit expense from your account, but on the whole we find that many mutual funds here are outperforming the stock market index itself, and therefore, but don't put all your money in the same fund also.
Right. I think we'll just go on to marketing also now. Marketing, marketing, as we know that it's a big chapter. It's consists of 14 marks, and in marketing then we start with, of course, what exactly is marketing. And basically we start with the fact that marketing as such, I mean, it's an integrated kind of a concept where we are not only talking about just about trading and just about exchange of goods or whatever. It actually starts from the identification of needs and wants, and then ends at by the satisfaction of that need and want. That is to actually create a kind of a customer satisfaction. So customer satisfaction is also one of the main ingredients of, let's say, the marketing concept. Shashikala, then what, I mean, how exactly do we differentiate between, I mean, as we know that there are various marketing concepts, I mean, various philosophies listed in the book. We have marketing concept, we have
basically various philosophies or concepts which have evolved over a period of time. It starts with how this production concept. This is basically about how in production concept the emphasis was on manufacturing more in terms of quantity, and making the good easily available at reasonable prices, and increasing the supply basically, and increasing production. Then in this, the major problem was that quality was not a concern here, and quality suffered. So therefore later it was felt that the product concept is better, where you focus also on the quality of the product that is being manufactured. And then we came to the concept of selling concept. Selling concept basically talks about selling whatever the seller has to sell, and the buyer here is not important. Eventually, of course, this is selling gave place to, or rather marketing was replaced. In marketing concept, the idea is the customer is king, and he is the focus.
The starting point was, of course, the market.
And yeah, that's right, and basically understanding what the need of the customer was, and so on. So marketing concept was a much wider concept which included the understanding the needs of the consumers, developing a product which the consumer wanted, and giving it to him, and so on.
And like in selling, it was profit through sales volume. Over here we have profit through customer satisfaction.
And eventually we have how profit making and marketing also should keep in mind the social objectives, like social concerns of society, environmental issues, and so on. So this is about marketing concepts and philosophies.
There's another call from Chennai. Yes, please. There's another call. Yes,
My
Veena.
question is that.
Right, Vinay. Right, Chennai.
Hello.
Yeah, hello. What is your question?
My question is, what is the concept of revaluation or devaluation into the money or rupee value? How does it do it, or what's the concept behind this devaluation of Indian rupee?
Okay, well, that's a economics question. But anyway, we'll try and answer this question. Dr. Goel is with us. He'll definitely answer the revaluation and devaluation of money,
Currency.
of currency, right?
Yeah, it's like this. see, today if a dollar is equal to, let us say, 45 rupees, the devaluation of currency means that the government consciously reduces the value of the rupee. That is, suppose there is a 20% reduction in the value of the rupee, then you see a dollar would not buy 45 rupees, it would buy 20% more. And that is, you say that okay, a dollar would buy say 54 rupees. So when the government consciously reduces the value of its currency in comparison with other countries' currencies, that is devaluation. Revaluation is used when the term is used when we actually try to increase the value of our own currency with respect to other currencies. Now in India, the government does not explicitly decide this, it has left it to market forces. Of course the RBI intervenes. So it's a kind of situation where the market with control by the government is pricing the currencies, and here therefore once we have a system like this, the need for devaluation by a conscious act of the government of India does not arise. Last time we had the government of India reduced the value of the rupee, that is devalued the rupee, was way back in 91. After that the value of the rupee is not devalued by government of India consciously, the value is falling and rising depending upon the market.
Or depending upon the market forces. Yes, from Chennai again.
Hello, namaste.
Hanji, yes.
Namaste, madam.
Namaste.
Actually, I want to thank your team. You are doing very helpful things for us.
That's nice. I will.
Thank you.
Thanks for
Well-
once again to the all.
Well, thank you. We hope you benefited. What is your question?
Yes, it is very beneficial for us. Thank you. One more.
Okay, thank you.
Actually, coming to the question,
Right.
in business studies, I have a doubt. General. Can I ask general?
Yes, please, and we'll try and answer it, of course.
Okay, fine.
Yes.
Yes, ma'am. I have a doubt in the international trade about entry port.
Entry port trade.
That is class 11 syllabus.
Right.
Okay, never mind.
Absolutely.
Right. Please go ahead.
And moreover, in the entry port, can you just explain the mechanism in about sir explain about the devaluation, and I need to know about the mechanism of how the Indian government valuing the currency, how it's going to come down, and how it goes right. I have a doubt in can you just explain
Well, I think we'll just see if we can answer that question. I think he wants to know.
Entry port is basically
Yes, you are absolutely right. But I need to know about a little bit the market forces. What are the? He explained about the market forces,
Okay.
but little bit can you just explain what are the effects from what are the other things?
How does the government value the rupee?
No. Yes, absolutely. But my question is, he explained from the point of market forces.
Right. What are the
I have a
different?
doubt, but I have a doubt on what are the other forces, like if you see the standard of living, GDP, there are other things also, whether they are included in that or not.
Other forces which are talked about in devaluation of rupee.
Only market
Yeah, what
forces.
are the other forces? Not in the devaluation, currency valuation.
Currency valuation.
okay.
Yes.
Okay. Dr. Goel, would you like to answer this
You
question?
see, ultimately all these factors that you are talking about, all these factors are reflected finally in the demand and supply of one currency vis-a-vis other currency. So you see, ultimately it turns out that if the demand is more, the price of that currency increases, that currency moves up.
Right.
But what causes the demand to go up depends upon so many things. For example, it depends upon the imports, exports, how much money. For example, foreign Indians, NRIs send money back home. Now when they send money back home, dollars are coming into the Indian economy and rupee component is released by the government. Now this creates a supply of dollars, foreign currencies. So all these factors, and of course with some kind of future outlook, the expectations, all these are reflected when the market operators are deciding about whether to buy or whether to sell. They are deciding about all this based upon these inputs. For example, if you are exporting, if you are importing, you need foreign currency. You go to a bank and buy some dollars on a forward basis. Sometimes you sell dollars because you are expecting some revenue to come in. So all these factors creates a demand and supply of the foreign currency vis-a-vis our currency, and all this gets reflected in whether the demand is high or the supply is high, and ultimately affects the price of one currency compared with the other one.
Right. Hanji, call from Maharashtra. Hanji, kahiye? Yes. Hello.
Hello.
Hanji, what is your name?
Yes, okay, Rahul.
Yes.
Hello, ma'am.
Hanji, hello. Good afternoon. What is your question? Sorry, we can't hear you. You will have to speak a little bit clearly. Hanji, kahiye? Your question, can you just be a little bit more clear? या हिंदी में बात कर लीजिए जैसे मर्जी. हाँ, ये चलिए, that call I think has got lost. I think we'll just go back to marketing. As we were talking about marketing, we were talking about the difference between selling and marketing.
That's right.
Which I think I think that is also a very popular question which comes.
Yeah. Basically, selling is more short-sighted, and where it includes only very limited things like only selling and making sure that the goods are transferred, while marketing is a wider concept, which the idea here is to understand what the customer wants,
Right.
Analyze his needs and requirements, and then depending on the requirements you manufacture the products. It is a long-term concept basically, where
right,
it includes more things like after sales services, ensuring that the
Right.
customer
I mean,
gets
it's
maximum
a
satisfaction.
It's a total concept, and it's an integrated concept mainly.
Yes.
And then we have another one which is called societal marketing concept, which also is being used very often these days. And what exactly? Can you just
It
tell
is
us?
societal marketing concept is basically where the concept apart from marketing, it's an extension of the marketing concept, where you also take into consideration the society issues related to society. So basically,
And
it's like
basically
social
the-
responsibilities of business and
social
so on.
advertising.
Yeah. Advertising.
The kind
yeah.
of advertising they do to just to spread, just to talk about a social message which they talk
Message.
about.
And being socially responsible in terms of not polluting the environment, giving something back
Ecological
to
aspects of
society, and
society.
these are the various things that are taken care of.
Right. Then we'll just go on to marketing mix. We know that we have 4 P's in our marketing mix. We have the product, we have the price, physical distribution, and
Place and promotion.
and
yeah.
place and promotion.
Yeah.
When we talk about product, we have again classification of products which are there, which are quite, it's given in quite detail.
Yeah, sometimes you get an application question in this, where they might describe a particular kind of a product, say a specialty product, and the student
Right.
here is supposed to identify what is
What
the type
kind
of
of a
product.
product it is.
So like say for example, if it's a convenience product, they might say these are products we buy regularly without spending much time or effort, and these prices are reasonably priced and so on, and the student might have to guess what is the type of product.
Not guess, I mean what
They have to. They have to obviously. yeah.
Call from Maharashtra. Hanji, please. Yes. Hello.
Hello, ma'am.
Hanji, hello. What is your name? Hanji,
I'm from Maharashtra.
right, Maharashtra.
Yes, ma'am.
Right.
My question is, what is the exactly meaning of money?
Money.
Money.
Okay. You are asking us,
As working principle, how can follow it in business?
and how can, sorry, I didn't get your question.
The Henry V 14 principle, that is specialization, this 14 principle, how can follow in business?
14 principles of management you're talking about?
Yeah, management. I'm talking
Right.
about management.
Right, the first book. Right.
Yes.
And how you can?
How we can follow it in business?
How you can apply it in business?
Yeah, ma'am.
Right. And what is money? Okay, Dr. Goyal, would you like to answer that question? What is money? Though it's not related to business studies, it's more related to
It is,
economics, and I think you must ask these questions again in economics, but we'll definitely try and answer it.
The better place to ask is in economics, but we will still try, because money, you see, there is no exact definition that you are asking for. You know, it is used in so many sources. It is said that, well, it is a medium of exchange, it is a store of value, etc., etc. But we all know that basically it is a medium of exchange, because it has facilitated the trade, transfers, etc., transfer of commodities, has replaced the earlier barter system. But as far as the exact definition of money is concerned, I don't think that there is any single definition. As far as the use of those 14 principles is concerned, maybe
Actually, the 14 principles of management which you were talking about, they are the 14 principles which have been given by Fayol's. They normally called Fayol's principle of management, and basically this is basically the basic theory of management. And now, why exactly do we talk about management? Management is in any case an all-pervasive concept. It is normally used in all kinds of organizations. But since we are doing business studies, so we try and use our principles of management. We try and use it for business, of course. And basically, can you just elucidate the
see, we have 14 principles of Fayol's management. Basically, here these principles can be applied in actual business. Say we have equity or order. They are very practical and very sensible, and in fact, anyone who applies them obviously is able to manage the business in a better way. Like we have unity of command, stability of tenure, equity, order, and so on. Unity of direction. These are almost like common sense, which if a businessman uses it in his business, definitely he will achieve result.
Fayol was more concerned with the higher levels of management, whereas Taylor was concerned with the worker shop floor level. So basically, if suppose we are using certain principles of management, then obviously we will be able to manage our business in a better fashion. That is the reason for these 14 principles of management. And as such, but again, these principles were formulated many years ago, and of course this is the theory base of let's say management, these two people, that is Taylor and Fayol. But now of course we have various other theories. I mean, the modern theories are of course very, very common now. In fact, we talk about time management, theory of time management, and various other theories also. But हाँ जी, पंजाब से right, a question. हाँ जी, hello. हाँ जी, your name please. ऋषभ, राइट.
मेरे को बिजनेस स्टडी का प्रॉब्लम है.
हाँ जी, कहिए.
चैप्टर 10 का मैंने पूछना था.
हाँ जी.
सेबी वाला पूछना था, स्टॉक एक्सचेंज वाला.
सेबी. ओके, राइट. हाँ जी, कहिए.
मैम वो कंसेप्ट मेरे को क्लियर नहीं है.
किस चीज का? क्या पूछ?
वो स्टॉक एक्सचेंज फंक्शनिंग मैम.
फंक्शनिंग जो है, ट्रेडिंग प्रोसीजर. हाँ, ठीक है, अभी बताते हैं आपको ट्रेडिंग प्रोसीजर का मतलब थोड़ा सा जो भी है यहाँ पे. हाँ, आप बताएंगे डॉक्टर गोयल.
ट्रेडिंग प्रोसीजर.
हाँ, ट्रेडिंग, आई थिंक ही इज सेइंग कॉन्सेप्ट नहीं क्लियर है. सो स्टॉक एक्सचेंज में वैसे तो खैर देयर आर नंबर ऑफ थिंग्स व्हिच वी कैन टॉक अबाउट इन स्टॉक एक्सचेंज, एंड आई थिंक लेट्स स्टार्ट विद जस्ट अ लिटिल बिट अबाउट स्टॉक एक्सचेंज, व्हाट एग्जैक्टली इज स्टॉक एक्सचेंज, एंड देन वी कैन एक्सप्लेन द
Shall I answer him in English only?
हाँ जी.
See, Rishabh, if you have purchased equity shares of a company, the company is not going to buy them back. Earlier it was not allowed, now it is allowed, but if you want to convert that share into rupees, because you have paid money, so suppose you want to sell them, naturally there should be some way, some mechanism through which you can sell your shares and get cash. For this purpose now,
थोड़ा सा इसको हिंदी में भी थोड़ा सा एक्सप्लेन कर सकते हैं.
ओके. अगर आपने कोई इक्विटी शेयर खरीदे हैं, आप उन इक्विटी शेयर्स को अगर सेल करना चाहें, तो उसके लिए कोई ना कोई ऐसी मैकेनिज्म होना चाहिए जहां पर कि इक्विटी शेयर्स के बायर्स और सेलर्स मिल सकें, क्योंकि आपको पता नहीं कि कौन खरीदना चाहता है, मुझे पता नहीं कि कौन बेचना चाहता है. तो अगर कोई मार्केट नहीं होगा तो कहाँ पर हम बेचेंगे, और ख़रीदना होगा तो कहाँ से हम खरीदेंगे. इसलिए ये मार्केट जो है एग्जिस्टेंस में आए हैं. यहाँ पर बायर्स और सेलर्स मिलके शेयर्स की ट्रांजेक्शंस करते हैं, ये हमारा होता है स्टॉक
स्टॉक
एक्सचेंज।
एक्सचेंज, राइट।
ठीक है। अच्छा, अगर कंपनी को जब नए शेयर इशू करने होते हैं तो वो प्रोस्पेक्टस से और एक दो तरीके हैं, उनसे वो शेयर्स इशू कर सकती है, लेकिन उन शेयर्स को आपने सारी उम्र तो नहीं रखना है, उनको कभी ना कभी आपको बेच के कैश भी तो लेना हो सकता है, तो इसलिए स्टॉक एक्सचेंज की ज़रूरत है। जब स्टॉक एक्सचेंज होता है तो वहाँ पर बहुत सारे बायर्स और बहुत सारे सेलर्स होते हैं, तो नेचुरली उनके ऊपर कोई ऐसी अथॉरिटी होनी चाहिए जो कि उनको
उनको भी
गवर्न करे, उनके लिए कुछ कोड ऑफ कंडक्ट बनाए, इसलिए कि वहाँ पर फिर ब्रोकर्स हैं, मैं बायर हूँ, आप सेलर हैं,
तो मतलब
कोई किसी को चीट ना कर सके।
बेसिकली हम अपने आप तो जाके नहीं बेचते हैं उसमें, नॉर्मली हम ब्रोकर के
इसलिए
थ्रू
हम ब्रोकर के थ्रू जो है, हम ब्रोकर को ऑर्डर देते हैं, सेलर जो है वो ब्रोकर को ऑर्डर देता है, और ब्रोकर्स आपस में मिलके वो ट्रांजैक्शन करते हैं। पहले करते थे शोर मचाकर, हाथ उठाकर, इशारे करके, आज की तारीख में वो ऑनलाइन होता है,
तो
कंप्यूटर बेस्ड है।
हाँ, मतलब बेसिकली नाउ डेज व्हाट ट्रेडिंग जो है, जो हमारे जो आजकल जो खरीदना और बेचना जो है, दैट हैज बेसिकली शिफ्टेड फ्रॉम द स्टॉक मार्केट फ्लोर टू द ब्रोकर्स ऑफिस,
एंड देयरफॉर इट इज कॉल्ड ऑनलाइन ट्रेडिंग,
एंड बेसिकली वे ट्रेड्स आर एक्सिक्यूटेड थ्रू अ कंप्यूटर। सो बेसिकली कंप्यूटर पे ही हम जो हमारे को शेयर चाहिए, जो नहीं चाहिए, उसके सारे कोटेशन जो हैं कंप्यूटर के स्क्रीन पे आते हैं, एंड उसी तरीके से हम फिर उस तरीके से हम अपना शेयर आपको वही कंप्यूटर ब्रोकर को हम अपना मतलब हम अपनी डिमांड या जो भी है डिमांड या बेचना है, अगर हमने बेचना है या खरीदना है, हम ब्रोकर को बताते हैं, और वो ब्रोकर हमारे लिए ऑन बिहाफ ऑफ अस द ब्रोकर विल ट्रांजैक्ट दैट पर्टिकुलर शेयर और दैट पर्टिकुलर थिंग। हाँ जी, कॉल फ्रॉम चेन्नई।
Hello.
यस, हेलो, हाँ जी, कहिए। यस,
Ma'am, my question is.
व्हाट इज योर नेम?
My name is Isaac from Chennai.
राइट, हाँ जी,
My question is, what is this entry trade point?
राइट, एंट्री ट्रेड पॉइंट
Entry trade point.
इन
Or entry trade point or entry trade port.
Entry port, this is class 11.
trade. Okay, fine. Sorry.
Entry
Right.
port.
I think we forgot to answer that question.
Okay, it is basically when you import for the purpose of exporting it. That is called entry port. Say for example, you import diamonds, then you polish it, finish it, cut it, make it into a jewelry, and again you export
And then
it.
you export it.
That will
so
be entry port.
basically, what I mean, we are importing the raw material, and then exporting the finished product
With value addition.
Right,
and
with
to
value
it,
addition, we are exporting that again to another country, and so this, I mean, this kind of a trade, I mean, because now we are the middleman, let's say, suppose. So this kind of trade is called entry port trade. Right, and does that I think that answers his question very well. Now what? Now I don't think we have too much time left, but still I think let's go on to a little bit about marketing. What exactly were we doing in marketing? We were also talking about in marketing. If you can, we just talk about in product classification, the packaging.
Okay, packaging involves basically three level. We have primary, secondary, and then there is a transport packaging. The primary packaging involves basically wrapping the product, say with a cellophane paper or something like that. Secondary would be putting that package into say another cardboard carton or so on, so that the product can be even sold like that. For transportation purposes, we have generally a third level packing, which is say basically making them into cartons of say a dozen or 20 in each box, so that they can be easily transported. You can get an application question in this also, in say you can get an example of a, they can say a shaving cream packed in a a carton was sold, so what is the level of packing used and so on.
Okay. Right. There's in consumer protection, when we go in consumer protection, if you see that we know that there is a 3-tier redressal system which we have, and basically what exactly is the relief which is available in under that redressal system to a consumer. Can you just
it could be compensation, the reliefs, or it's also sometimes known as remedies,
or the remedies right.
which are there. It could be removing of defect, making compensating in terms of money, the loss which the person had suffered, or it could be make a particular seller discontinue the unfair trade practice which he was doing or so on, or withdraw a hazardous product from the market which was being sold and so on. That could be reliefs or remedies available to consumers.
Then I will just go on quickly under the redressal system, the 3-tier redressal machinery which is there. That, and you were also mentioning about what exactly is, I mean, like let's say after the National Commission, where exactly can a
that is
consumer go?
that is
That is the,
generally when cases are filed from the lower level courts, the highest level they can appeal is from with the National Commission. But suppose in case a customer has filed a case directly in the National Commission, which means that the value of the loss and compensation sought is more than 1 crore, then in such a case, if the consumer is dissatisfied with the judgment of the National Commission,
Right.
only in such a case he can appeal to the Supreme Court. While for the other 2 levels, that is District Forum and State Commission, the highest level is the National Commission.
And you were talking about something about the original jurisdiction.
This is the cases, original jurisdiction cases are ones which are filed in the National Commission for the first time.
Right.
So obviously the
Right,
value
right,
exceeds
right.
1 crore.
Right. I think we've finished our time, but I think there's one question which you didn't answer, that Arushi's question about the symbol. I think we'll put it on our website, and we'll definitely answer that question sometime on the website, and also if you could just send a mail to us, then we'll definitely check up and answer this question. Now I'd just like to thank our experts, Dr. Goel and Ms. Shashikala. They've been very kind to spare a lot of time, and like I also hope that your questions were answered, and we'd like to wish you all the best for your exams. And at any time you can still I think you can email us a question, whichever question. Our email is given given on the screen, and you can mail us a question. Thank you so much, and all the best to you for your exams.